So after a really rough day on Dalal Street, pretty much everyone was asking the same thing. What on earth happens now? Well, today, on February 20th, 2026, the Indian markets gave us a pretty dramatic answer with a stunning comeback. We're going to decode that whole turnaround for you. Let's dive in.
I mean, just think back to yesterday. The Sensex just tanked down over 1,200 points. The question on every single investor's mind was, is this the start of something worse? Or are the bulls finally going to find their footing and fight back? Well, today we got our answer, and it was a loud one.
All right, to really get the full picture, we're going to break this down into 4 key parts. First, we'll hit the big numbers that define the recovery. Then, we'll dig into the real reasons behind the rebound. We'll also see who the winners and losers were, because it wasn't even for everybody. And finally, we'll follow the money, the smart money that is. Okay, first up, the recovery itself. Today was really a story of pure resilience. I mean, swinging from a brutal crash one day to a surprisingly solid close the next, it was something to see. The headline numbers tell a big part of the story, right? You can see the Sensex and Nifty both closing in the green. But the number you should really be looking at is that last one, the India VX. That's what we call the fear gauge, and it dropped by a massive 5%. That tells you the panic from yesterday wasn't just put on pause, it was actively fading away.
So that leads to the million-dollar question. Why? What actually pulled the market back from the edge? Let's get behind the rebound and really unpack the 3 big things that drove all this optimism today.
It really all boiled down to a powerful mix of 3 factors. You had savvy investors on the hunt for a good deal, some absolutely blockbuster news from the world of AI, and a super solid economic backdrop. Let's break each of those down.
First, the mood at home just won out. Despite a lot of noise and tension on the global stage, investors here in India just kind of shrugged it off and focused on what they knew. They saw yesterday's big drop not as a reason to panic, but as a sale. A chance for some value buying in rock-solid heavyweight companies like NTPC and L&T.
The second driver, a massive dose of long-term confidence from the tech world. Google announced a $15 billion investment to build its very first AI hub right here in India. Now that is way more than just a headline. It's a huge psychological boost that reinforces that big picture India story that everyone's been talking about.
And it wasn't a one-off thing either. On the very same day, TCS announced a huge partnership with OpenAI. So the takeaway here is that this isn't just one company placing a bet. No, this is a powerful trend, and it signals that India is becoming absolutely central in the future of AI.
And the third pillar holding all this up was a solid economic foundation. The RBI announced that India's forex reserves have hit a brand new all-time high. Now, think of this like the country's financial shock absorber. It helps protect the rupee and sends this powerful signal of stability that gives investors, both at home and abroad, a really good reason to feel confident.
But here's the thing. This recovery, it wasn't a case of a rising tide lifting all boats. Not even close. Which brings us to the day's battleground, the very clear winners and losers across the market.
And the split was pretty dramatic. On one side, you had sectors focused on the domestic economy, like metals and power, which just surged. Investors also piled into PSU banks and FMCG stocks, the companies that make everyday stuff, which are always seen as a safe place to park your money. But on the flip side, the globally focused IT sector took a hit, and riskier small-cap stocks actually ended the day down.
And if we zoom in on a few individual stocks, you can see some interesting stories playing out. NTPC and L&T were basically the heroes holding up the Sensex. Novartis India was buzzing with news of a potential sale, and Cochin Shipyard popped after landing a big deal for green fuel ships.
And this brings us back to what might be the most crucial detail of the day. The fact that the small-cap index ended in the red tells you a whole lot. It shows that investors weren't just throwing money around hoping for quick gains. No, the smart money was clearly looking for safety and stability in large, well-known companies. Speaking of smart money, let's follow that trail a little further. For our last section, we're going to see exactly what the big players, the institutional investors, were up to today.
Now, to really appreciate what happened today, you have to remember how rare yesterday was. We had both foreign and domestic institutions selling off their holdings. That doesn't happen often. But today, that whole trend did a complete 180, telling us a story of stabilization.
And here are the numbers to prove it. Just look at that net value column. The foreign institutional investors, or FIIs, became net buyers, putting in over 428 crores.
But the real story is the domestic institutional investors, the DIIs. They came in with even more firepower, pouring in a net of over 1,100 crores.
This chart just makes it crystal clear. When you add them together, these two heavyweights of the market pumped over 1,500 crores back into stocks. After all the fear we saw yesterday, that is a massive vote of confidence.
So what's the big takeaway from all this? Well, the general feeling from the experts is that, yeah, today was a huge relief, but the market's underlying mood is still buy on dips, sell on rallies. What that means is investors are still pretty cautious. They're happy to buy when prices are low, but they're also very quick to take profits when things go up. The volatility definitely isn't gone yet.
Which leaves us all with one final crucial question. The Nifty is sitting right around that 25,500